Hi, my name is Glenn Tompkins, Senior Instructor here at VectorVest, and welcome to our educational tutorial on relative safety. As we've been talking, we have a bevy of core proprietary indicators to help you to make the right decisions at the right time. This session is on relative safety. Relative safety is an indicator of risk. Relative safety looks at the consistency and predictability of a company's financial performance. In layman's terms, relative safety will tell me if a stock should meet or exceed its earnings expectation quarter over quarter, year over year. Keep in mind, earnings is the engine that drives a stock's price higher. If a company consistently and predictably meets or exceeds its earnings expectations, that makes it attractive to investors to buy more shares. So relative safety is a very important indicator to tell you if a stock will meet or exceed its earnings expectations, since that is the engine that drives a stock's price higher. All right, let's go take a look at our watch list. This is our watch list of stocks that we're sticking to for this educational series. So ENPH, AMD, Apple, Boeing, and Sprint. We've talked about value and how important that is to find out if your stock is over or undervalued. We've talked about relative value, the stock's long-term price appreciation potential. This week, we're going to talk about relative safety. Keep in mind that all of our core indicators are cast on a scale between 0 and 2, where above 1 is favorable, below 1 is unfavorable. Relative safety looks at the consistency and predictability of a company's financial performance. The higher above 1 it is, the safer the stock is. Enphase has a relative safety of 1.02. Well, it's clearly above 1, it's favorable, but it's very close to 1, so it still is favorable, but something you keep your eye on. With a relative safety of 1.02, the chances are this stock should meet or exceed its earnings expectations. The higher above 1 it is, the more predictably the stock should meet or exceed earnings. Let's go to Advanced Micro, 1.18. Well, it's a little better than Enphase. It is above the value of 1, so it's favorable, but it should have a higher probability of meeting or exceeding its earnings expectations as compared to Enphase. Now we get to Apple. Nice. 1.39. Looks like it is the safest stock out of this group of 5 stocks in our watch list. Apple has the higher probability out of all of these stocks to meet or exceed earnings expectations. The next stock, Boeing. Even though the stock is undervalued, it does have good upside potential. Guess what? The safety is good too. The safety is at 1.22. The stock still has a higher probability of meeting or exceeding earnings expectations. But again, as I mentioned in a prior video, what you want to look at are these indicators on a graph to see if they're rising or falling. But clearly, just by looking at the data, relative safety is still favorable. Sprint. Well, this stock is fairly valued. Its upside potential is really not there, as it is below 1 and unfavorable. Relative safety tells the same story. At 0.83, it is below the value of 1. It is unfavorable, and it tells me that when Sprint comes out with earnings, chances are, just like Johnny Mathis, chances are it may or may not exceed or equal out to its earnings expectations. So if I'm looking for stocks that have good earnings or that have the possibility of good earnings, I'm looking for stocks that have a relative safety of greater than 1 for that purpose. So this is important, especially when earnings are coming out on your stocks, to check that relative safety. It is a smart enough indicator that should tell you if the stock has a high probability of meeting or exceeding its earnings expectations. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.